In this video, I want to show you how to practically use PD array and what I call the 2 time frame rule to take trade. This is one of the most powerful concepts you can find in the smart money concept. So what exactly is PD array? P simply means premium, D simply means discount array. Array is simply means arrangement of items. So we try to arrange these 7 institutional reference points according to their order of priority. So whenever you're taking trade, you want to see them arranged in an order of priority. Which one do I consider first and which one do I consider last? So I have made a complete tutorial on that. I've shown you all the 7 institutional reference points. I took almost 28 minutes. You may do well to watch this complete video on my YouTube channel, and then you're going to come back and watch this complete one. So what we do when we have a market, the first thing you do is to basically establish your order flow. That is to know what the market is doing. And from the look of this, we see a downtrend from here to this level. And what we do in a downtrend is to basically sell. That is what we do in a downtrend. We want to keep selling. Do not trade against the trend, except if you know what you're doing. So what we are seeing right here is basically a downtrend, and is defined by this kind of movement. When we constantly take this low, we are basically creating new lows. This is what we call a break of structure in this smart money concept. Break of structure. Each time we break structure, we want to see market pushing down. Break of structure, and then another break of structure. We identify structure by looking at the last week that printed, and then break of structure, we want to see that the body of the candle closes below the wick. So that is simply break of structure. So what we do in PD array is to simply patiently wait for the retracement to come before we can take our trade. For example, what we see right here, once we see this break of structure, assuming this did not play out, the ones that just played out on the right hand side, assuming it did not play out, and we've only seen this break of structure, okay, this break of structure from here, we saw that it broke structure to this level and retracement is coming in. Now what we do with PD array is to basically go and pick our Fibonacci tool, pick it up and put it from the first place where the movement starts, bring it down to this area, the last point, okay, and then look out for the 50% level. Take your horizontal line, put on the 50% level. Assuming this did not play out, just take it out now. You can delete this Fibonacci tool. So what you do is that above this place is called premium, below it is called discount. So you will sell at premium and you will buy at discount. But since we are in a downtrend, we want to sell at premium, and what we see right here is that price is coming to premium. So this is where your knowledge of the PD array comes handy. When you come over here, you're going to see that if it is in a bearish market, you first pay attention to this. Look at this, make sure you check the items. If your market is at a premium, you check these ones first. You can see bearish breaker, you see liquidity void, bearish order block. So this is what you should look out for if you are at a premium, and this is what you should look out for if you are at a discount. Please get it right. Look at the items, they are the same thing, but this is bullish order block, this is bearish order block. So we are in a premium at this point because price is here. So which one do we pay attention to? The first thing to do when you see this kind of thing is to come to these items and look for a mitigation block. If you can find it here. Do you find a mitigation block? No, I cannot see any mitigation block. The next one is what? The next one is bearish breaker. I've taught all these ones on that video, so I don't want to go back and teach that again. So a bearish breaker is not there. How about a liquidity void? A liquidity void is here. This is simply identified by this sudden movement of price by these very large candles, and we see it as an imbalance. It is called a sell side imbalance, buy side inefficiency. While you can see price is trying to balance it since it is an imbalance. So we have one, we can confidently now mark out this level and say yes, we can see a liquidity void. This is a liquidity void, and we see price trying to fill it up, which gives us more confidence. Now it is not just time to blindly take trades. We will also go back and look out for a fair value gap. Do we have a fair value gap? Let's go and check. Yes, we have a fair value gap. The fair value gap we are going to pay attention to should be at premium. That's above the 50% level, which is known as the equilibrium level. Above it is premium, below it is discount. So we will mark only this fair value gap, this level. Okay, this fair value gap is what we will mark for our trade entry. So we have seen a fair value gap. We can decide to take trade from this fair value gap because we can see it, but it is not certain that this fair value gap will hold price. Price may decide to even come to this order block, but we give priority to a fair value gap before that particular order block, this bearish order block. As you can see from this, we have a bearish order block, but we will pay attention to a fair value gap before a bearish order block. That's why we will pay attention to this fair value gap. Now, what we will do in order to know whether this fair value gap will hold price, you can see the difference between this candle and this candle. In a 3-candle price action, 1, 2, 3, the low of this candle and the high of this candle are not connected, so that is a fair value gap, and price is coming into it. Half of this fair value gap, that's 50% of it, half of it is called consequent encroachment, and then price is coming there. Now what we will do is that if you are using 4 hour as this movement, what you're seeing, if it is 4 hour, you will drop down to 1 hour time frame just to get an entry. So I'm using a daily time frame. You can use any time frame you're using. Okay, so I will go to 4 hour time frame now and look for an entry that can get me that position. So this is the 4 hour time frame. You can see what is happening in the 4 hour time frame. This is the movement that we marked. This is our equilibrium level, that is the 50%. Now in the retracement that is coming in the lower time frame, it will actually show you what is happening. So in the lower time frame, you can see this is an uptrend. This is 4 hour time frame. If you go down, this is an uptrend for people. This is a break of structure, this is a break of structure, and then we have a higher high, higher high, higher high, higher low, and a higher low. The last higher low that was formed was here. Let me show you. This is the last higher low. Now until we take this higher low out, that's we want to see the body of candle print outside it, we are not going to sell. We are not going to sell. So what we do is that we will mark this level. Okay, we will mark this level and then wait for price to break it out. Look at what I'm having here. I hope this is okay. So we want to mark out this level and see price push outside it. Now, do we have a push here? No, we have not closed below it because this is just the tail. Do we close below here? We did not close because this is just the tail. But look at what happened here. We have actually closed below it. Okay, we have actually closed below it. So we can say that this is actually our level that we have taken out, this level. So we will wait for price to come back to an institutional reference point again. Please get it right. Now we can use the same arrangement. Since we are bearish, we will use this guy. Now if you look at these ones, the coming back, we did not have a fair value gap. We have something like a liquidity void, but we have an order block here, a bearish order block. Can you see a bearish order block?